Remodeling loans, what are they? How can we best leverage them for our advantage? What are the rules for qualifying for those? Good afternoon. This is Mike Renick. I'm the team lead, the senior broker with Team Renick Real Estate Services, part of that great Keller Williams on the Water family. Welcome to the afternoon edition of the Mortgage Insider. My guest today is Mr. Christopher Kiblin. He has over 20 years experience in the finance mortgage industry. He is the VP of Mortgage Lending. And Chris is my guest every Tuesday, normally in the morning, but because of a schedule change I had today, we're bringing you the afternoon edition. Chris has fine-tuned his customer service skills to the highest level, offering Manatee and Sarasota County homebuyers unbelievable service with his promise to give you a low rate on the right mortgage product, along with transparent and fair fees. They leverage cutting-edge technology to streamline the process and simplify every step and provide unmatched service and expert advice. So with that said, we're one click away. And there he is. Good afternoon, Chris. How are you?
Good afternoon, Mike. How are you?
Excellent. Thank you for being flexible on your schedule today. I truly appreciate that.
Yeah, absolutely. Didn't want to give up our show.
No, I like that. I have a lot of fun with this. So we're going to talk about remodeling loans this afternoon. So go ahead and take it away.
Yeah, so I thought this was a great topic to talk about because, in our area, especially in our area, there's a lot of homes out there, the older homes that need to be fixed up, people who fall in love with these homes, but yet they can't really do anything with them. They need work or, here's the biggest thing is like, well, I really love this house, is in the right areas, right neighborhood, but I hate the kitchen or I hate this part of the house. So one of the great things to talk about is that, the type of loans that we can get. So we have what's called a renovation loan. And there's two different types of renovation loans. There's what we call an FHA 203K renovation loan, and then there's a home style loan. So let's talk about the FHA 203K loan, okay? So an FHA could be a single family home, 2 to 4 units. It could be a 3 to 4 unit property, but must pass a self test. And you could do these as little as 3.5% down. And the big difference between this one and the home style is credit score. Okay, I can go down to a 620 credit score on an FHA home 203K. With a 203K, so a 203K is going to be, majority is going to be like, hey, I want to put in a new kitchen, or I want to update a bathroom, maybe a new roof. It's going to be whatever is going to kind of the main areas. So it doesn't allow you to do as much as a home style will, but one of the things it does do is it has a smaller down payment of 3.5% down and a smaller credit, a lower credit score that will allow you to do the renovation loan. Okay. On the home style renovation mortgage, these are a little bit different. This is conventional financing. Okay. So what that is you can do as little as 5% down. You can do, it doesn't have to be a primary residence. So you can do a primary, second home. You can do an investment property with these conventional mortgages for the home style. And it's basically, it allows you to do whatever you want to the house. One of the great things about this one is that you can actually take the house, strip it all the way down to the foundation and rebuild the house. So if you wanted to, you just don't like the house, you love the area, love the lot, you take it, leave that foundation, build up your exact house that you want, and just basically like you're starting over. So it's a great thing. You can add a pool, you can add whatever you want to it. The biggest thing that we want to make sure is that we're getting the value. And this is really key with renovation loans. So it's kind of like talk about a little bit of the process of a renovation loan, okay? So what happens is hey, you call me up and say, hey, Chris, I've got this guy. He wants to do a renovation loan. He found this property. So what is the next step? So the next step is for them to go under contract. Okay, so once they're under contract, they're going to go to their general contractor, who has to be licensed, and they're going to say, hey, the customer's going to tell the general contractor, this is what I want to do. I want to fix the kitchen, I want to do the bathroom, and then that general contractor is then going to give the client the bids. Okay. what we're going to do is then take those bids and add them to the appraisal, right? So the appraiser is going to come out, appraise the house. Then that appraiser is going to take those bids and those upgrades to the house and come up with a new value. The goal is that whatever the purchase price is on that house and those new bids that you're adding in all come to the same value of the loan, right, or the purchase price. So kind of an idea, let's say you're buying a house for $100,000 and you want to do $50,000 in upgrades, you know, kitchen and that kind of thing. You want, now your hope is that everything you're doing is going to get the value to the $150,000. Now, when you do the loan amount is off of the $150,000. So your 3.5% down, your 5% down is off of that total loan amount, the total whatever your repairs and the house. Okay. So once you do that, you take it, you get the appraisal back, it comes back, it's fine. Then it's just like a normal loan. You actually go to closing and then you're done. You don't have to wait. A lot of people think, well, they got to do all the repairs before you can actually settle on the loan. That's not the case. We actually go to closing. Once you go to closing, then what happens is that general contractor, he has 6 months to get that deal, to get those repairs done and those whatever we're trying to do to fix up the house. So as soon as you close, you can call our draw desk. The draw desk will say, okay, I'm ready to release my first draw to the general contractor. The general contractor starts coming out and starts working. And then let's say they're about halfway finished and they say, okay, I'm ready for my next draw. So what they do is then we call the draw desk. They will then send out an inspector out. That inspector will come out and make sure that they're doing everything correctly. And they're going to follow up, make sure if there's any type of inspections that need to be done, that you're filing the right permits. What we're going to do is we're going to protect the customer and protect our investment, right? So we want to make sure that they're doing everything they're going to do. And then the same thing at the end, right? So let's say you have 3 draws, and then at the end of when he's finished, he'll get his final payment. We'll make sure that everything's completed. It really does protect the consumer, because what we'll see a lot of times, and you'll hear these horror stories, is I hired this general contractor. They showed up 3 times, but then they never showed up again, right? And then you paid them all this money. Now you can't find them, or they're gone, or whatever. So with us is that we're going to make them go under contract with us, so they're liable to get this work done in 6 months. And then also we're going to check the references. We're going to make sure that we check around to make sure that they are good and valuable general contractor. We just don't want anybody, you know, who's out there that doesn't do good work and to be working on your house. So it's a very good process, because, you know, some people, they're like, I don't know who to, you know, call. If something comes up, you know, we're going to fight that battle for you instead of you trying to fight that battle by yourself. So it's a great way to do it.
There's many aspects of what you shared that I really, really like, but 2 stick out. The first one is we're going to appraise it on the future value. So the renovations, the remodeling that we're going to do, the appraiser takes those into account. So it helps us get the true value for our dollar, in the sense, if I'm going to spend $50,000 and I'm only going to get $10,000 increase in value, I want to know about that. But so I really like it. Future value is involved there. But secondly, and as importantly, is the partnership. You know, there's tons of good contractors out there, but it only takes one. And when that happens, it's very painful. So having the partnership with the bank on the project, I think, is another good attribute. So I love everything you shared about these programs.
Yeah, it's just, I mean, there's a ton of great general contractors out there, but like you said, every once in a while you learn that one, and then you just feel, you know, what happens then. You're right. You don't want to fall victim to that. And then it's great because you got the bank behind you and you got their resources, you know, just not your own resources, that will either get our money back or we'll figure out a way to make it work.
No, I really like that. Chris, anything else to share?
Nope. If you guys have any questions or want to know more about renovation loan, feel free to call me anytime. My phone number is 443-668-5727. I can always go over this in more detail.
Chris, I really appreciate that. There's a lot less I have to know about mortgages because we have partnership with someone like yourself. So thank you.
You're welcome. If you guys need anything else, just let us know.
All right. I will see you again. We'll be back on Tuesday morning next week. Thank you again, Chris.
All right. Thank you, Mike.
Yeah, take care.